Right, it is time to begin. So today we'll be talking about stocks and strategy selection. So how you would select your strategy and how your strategy will select your stocks. First off, if you remember from our first day, an edge is just a probability of one thing happening more often than another or other things. A good strategy always gives you some sort of edge, some more than others. A bad strategy gives you a negative edge, and in that case, you can just do the opposite. That's what a lot of people who work as stockbrokers, when they see people lose money, because stockbrokers are the people who place trades for regular people, they just look at what their strategy is, and then they themselves would do the opposite because they'll be making money. A stock strategy should also follow these principles. Just like flipping a coin, if you have a strategy and stick to it, you will almost definitely make money. So just like flipping a coin. So let's find a strategy. What does an investment strategy consist of? Can anybody take a little guess? Shosha?
You need to have like your result or like what you want out of it. And you also need to have, I guess, a plan and maybe material of like how you're gonna achieve that. Though I don't know how the materials thing is gonna work.
That's I think you've been looking on the slides.
No,
But yes, you have.
it's from second step from my school. You have to make some sort of goal.
I've heard of second step before. What is it exactly?
It's sort of like this class project that makes you like very annoyed. Last year we had to do this goal that as long as we did our transition faster, we could get exploration time, which is basically playtime, extra playtime.
I used to have that thing at my elementary school too, but it wasn't called second step. It was called junior achievement.
Interesting.
Our teacher just let us did it as not an assessment, just an assignment, and most of our assignments were to build the tallest structure with chopsticks and tack, and we reached the ceiling.
Wow.
And look how high the ceiling is.
That's impressive.
And we use some wrappers too.
Nice. So next, we need financial and technical analysis. Remember those two? Also, I'll put your hand down, Shosha. You can focus on one or another, or a combination of both, but whatever you choose, remember to stick to the strategy. And so just like these two guys, you need to take a look at how you're going to get somewhere, because they're very perseverant and you have to be very perseverant and always stick to the strategy. Don't let your emotions overwhelm you. It's kind of like Jedi training from Star Wars. You have to make sure you're not going, oh, I think it'll go up, and then put more money into it. Or, oh no, I lost money. I'll keep my money here so that it can go back up, and it'll go back up and I'll make money. So if you focus on that, you'll definitely lose a lot of money. And the best traders, they actually have a 50% lose rate. Like half of their trades don't go through. They lose money. But the way that they're the best traders in the world is that they have a system in their brain or in their mind, which doesn't make them want to immediately pull out of the stock if they don't make money, or keep their money in the stock if they aren't making money. They make the losing trades as short as possible, and then they make the better trade, the one that makes them money, as long as possible. So you need a lot of perseverance to do that. So technical indicators. Technical indicators are what people usually start off with in a strategy, and it's the one that most people first learn. I learned it first. So, and I guess you guys will too. Some include the cup and handle pattern, head and shoulders, consolidation diamond, and many trend lines. We'll get into this in a moment. Some terms involved with technical analysis are trend line, pattern, moving average or just average, breakout bar or breakout point. So let's start with an example. Oh, here's the cup and handle pattern. If you see a cup and a handle, it's going to go up. Most of the time it goes up. I think it goes up 85% of the time. And here's the consolidation diamond. So you can see that these lines basically connect the bars. Each one of these bars means it's the price range that goes along in that one day or 1 week. And if it's green, the bottom is from where it started, and the top is where it stopped, and red is the opposite. Top is where it started, and bottom is where it stopped. These little wicks, these things are called candles, and they have little candle wicks on the ends. These mean the highest or the lowest prices that the stock got to in that one day. So the consolidation diamond, it basically connects the points on the graph, and you draw a line that connect them, and it basically makes this diamond. And whenever consolidation means it's just moving still, not the price isn't going up or down. And basically the diamond squishes in the price, and then it's either going to go up or down. So that's how you can predict how a price is going to move. So next, this is the price chart of gold around 2012. So let's begin. Tim, do you have any experience with this? I remember that I taught you.
I think I remember that the bottom is a date, and the left side is like the price.
Yep. Shosha, do you have a question?
Just like thinking, wait, can I annotate really quickly?
Yeah, sure. Hold on. How do I do that?
I don't know.
There we go.
Okay, let's see. I think this is like a cup, and this is like a handle in a sense.
Yep. That's exactly right. That's why I picked this example, because you can see the cup. You can also see the handle.
It's a
Then it went
little
up.
obvious.
It is pretty obvious. That's why I chose it. So let's draw a trend line. So basically, here, I'll clear your drawings. Tim, let's take a look at the handle first. We'll draw a trend line down like this, another one like that. It's not really a handle. Have you ever seen a cup with a spike handle? I haven't. But basically, if you see around here is the place where it starts to squish in, and then it moves up all throughout here. Not much, but it does move up.
Does
So we
it
could-
usually fall down a lot afterwards?
I mean, it depends on the stock. The cup and handle only shows you that it'll go up, and then not anything afterwards. So another thing that we could do is take a look at the averages. You may have noticed these lines running through the graph. Do you guys want to guess what they are? How about you, Felix? Do you want to take a guess? Or anybody besides, anybody who hasn't gone before? No? Okay. Oh, wait. Felix, can you guess what these lines mean or represent? You can type it in the chat. Dip in value. That's a good guess. But not quite. Why did you think it was that? It's very interesting. Lauren says averages. Yep, that's true actually. They are the averages, but I could also see how you could think of them as dip in value because it dips down. Yeah. So basically,
Why are the gold and the red lines so different?
oh, because this one is actually the average for 10, and this one is the average for 50. So I'll explain it to you.
The days?
Yes. I mean, if it's in days, it'll be the last 10 days. If it's in weeks, it'll be the last 10 weeks. If it's in months, it'll be the last 10 months or 50. So basically, if we take, where's the line? If we take, oh no, this day, it'll be 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. The average of that day through that day. So I'm going to use another color. The next day, this line, it'll be an average of this one. And so it keeps on going. So basically, it's an average of basically the last 10 days. So it's the same with 50, but because 50, I don't think 50 goes, I don't think I can count to 50 without using up a lot of time. So that's basically what the moving averages are. That's why they're called moving averages, because they're always on the move as the days go by. You guys have any questions? No?
Why do they go to different points on like at the end?
At the end, it's because this one is the average of the last 50 days, and this is the average of the last 10 days.
The last 10 days, and the last
Yes.
50 days.
Mm-hmm. And the next day it'll be the last 10 days because it'll move. It'll always be 50 days, and the range will move with it. So you guys can imagine like a river, but it's not moving, and you're in a boat, that's today, and you're holding a fishing net, that's 10 days, and then a much bigger fishing net, which is 50 days. And as you move along, they're moving along with it. So next up, if you guys don't have any questions, we have financial analysis. It should be the bulk of your analysis, from 80 to 85%. That number may be useful. Similarly, technical indicators should be around 10 to 15%. If you remember from any of the last classes that I did, which I think only Tim did. Thanks, Tim. This type of analysis is more complicated than technical analysis, but it is said to be more effective as well. I personally cannot vouch for either of them. I think both of them are equally good. I've used them both. They have produced very good results. Financial analysis involves looking at a company to see if their value will go up and down. It's looking at the company itself. So the things to look at include their annual profit, how much people use their products, how many people use their products, and how much control they have of the market. Little tip, this is called, where is it? This part, if they have control of the market and how much of the market has control, is called their market share. What share of the market they control. So financial.
Monopolies control 100% of the market.
Yep, that's what a monopoly is. What about an oligopoly?
Okay, monopoly.
What's an oligopoly, Tim?
More than one market.
It's like a monopoly, but it has, instead of one company, like 5 or 6 companies that work together. It's a little tip for the future. if you guys ever want to go into economics.
Ganopoly? It's called a ganopoly.
It's called an oligopoly.
So it's like a
All of
monopoly, but controlled by a few companies, not just one.
Yes, like an oligarchy is like is like a monarchy, but a small group of people.
Like a government.
Yeah, like a government. So financial analysis has a lot of lingo, and you don't have to memorize them, but it's good to know what they mean. Some terms include revenue, sector, DE ratio, PE ratio, and operating margin.
What are the D and P ratios?
Good question. So DE means debt to equity. So that means how much a company owes compared to how much they have altogether. So if I have a debt to equity ratio of 1, say I have $100 in debt. Wait, where'd it go? Let me edit. Say I have $100 in debt and I have $100 owned. That means I can use the $100 to pay off the debt. So that would be a debt DE ratio of 1. But if I have $200 in debt and only $100 owned, I would have a DE ratio of 2. So it's 2 divided by 1. In this case, 4, 2, that would still be a DE ratio of 2. Because if you divide them, that's what you get. And PE ratio is price to earnings ratio. So it's the price of the company divided by how much a company earns per year. So hey, I can show you an example. So let's take a look at Amazon's PE ratio. Amazon's PE ratio is 78.25 or 46. Let's say it's 50. Amazon's PE ratio is 50. Where is it? So basically, for every $50 it has, for every $50 in price, the company gets $1 earned per year. So that means technically it would take you 50 years. It would take you 50 years to basically break even. So if there's a PE ratio of say 3, the price of the stock would be $15 per share, and it would earn $5 per share. So that means every little bit that the company is cut up into, a little tiny piece of that company, the fraction of the earnings that that little tiny stock share has, is going to be earning $5 a year. Tim?
Can you buy all the stocks and own the company?
Yes. That's how a lot of people transfer ownership. They sell the
Elon Musk.
stocks. What? Like Elon Musk or Warren Buffett. Warren Buffett. He bought I think it was a textile mill for like making cotton clothes. And he bought all the shares. This was in like 1970. And he basically turned it into his own company. And guess what the cotton clothes company now is?
What?
It's a mega company that owns a lot of other companies. It's called Berkshire Hathaway. Have you heard of it?
Oh,
Yes.
Berkshire Hathaway? I bought that share.
Do you know what Berkshire Hathaway owns?
What? I
Snickers.
think it's computers.
They own Snickers.
They
They
own
own Coca-Cola.
Snickers.
They own Geico.
Wait,
They
they own Coca-Cola.
Yeah, they own
And
Geico.
Snickers.
Yeah, they own a railroad.
Goodness.
They own a bunch of different companies. See, Berkshire Hathaway owns Snickers.
And Coca-Cola. Why don't they share the recipe?
Because if they shared the recipe, they would not be able to make money off of it anymore because everybody could make it by themselves.
Starbucks has shared, well, not Starbucks shared its recipes, but Starbucks recipes have been leaked. And it hasn't gone out of business.
I mean, that's because it's only one. Plus, they're super
Not
expensive.
really.
Have you had a sandwich? It's like $20 for one like this big. Like I could take 2 bites and it's done.
No,
Yeah, it's because you're kids.
What?
But basically, oh, it also owns American Express and Verizon.
Wait, what?
And it owns a little bit of Apple.
Wait,
what
just
is a
stocks,
little
or
bit?
does it own the entire company?
A
Of, like,
little bit.
Coca-Cola?
It owns
For
many
example.
shares. Remember how I said that owning shares of a company could get you on their company board? He's on the board, I think.
You think?
Yes. So your strategy should have different kinds of tactics. Just like chess, you must approach an investment with a clear plan and goal. So an
Actually, in
investment
chess,
plan,
you don't actually have a clear plan.
you need to have a clear plan if you want to make money in the long run.
Yeah, but in chess, you don't have a clear plan.
If
See
you
what
want to
the other
be
guys-
as good as this guy, you want to.
Magnus
So,
Chase. I mean,
An investment
Carlson.
plan has to be planned, tested, and proven that it has an edge in order for it to work in the market. We will be using some stock simulators, not real time or real money, to test out some strategies that you have. We will also be,
Investopedia.
no, not Investopedia. It's not really a simulator. I'm just going to be pulling up a chart and saying, what do you think will happen next? And then scrolling to the right. Don't worry. We'll get to Investopedia later. And we might get to play
No.
GimKit today
Yay!
if we get through everything fast.
No.
Extra credit. Who is the guy in the picture?
Magnus Carlsen.
Good
Wait,
job.
let me see.
It's Magnus
Yes,
Carlsen.
Magnus Carlsen.
See, if you want to be as good as chess as him, you have to have a plan.
I
He
think
has a
there
plan, but
used to
he
be
switches
stories
to plan
circulating about him
often.
cheating.
What?
There used
That
to
is the
be
plan.
There used
Just
to be
like Tim's, just how like Tim's buying options isn't technically cheating, but it's a plan.
I guess.
Tim, you can start.
What?
You can explain it later today, okay? With the tips
Okay.
from class, you guys can make your own strategy. So I suggest you look up some ways, some different indicators like PE ratios, DE ratios, something like margins, not stock margins, like operating margin.
What
So one example
exactly do you
strategy.
mean by strategy?
Strategy, it's a way to identify a stock that is good to trade. So one example is that the price must be bigger than the 10-day moving average, which must be bigger than the 50-day moving average, which must be bigger than the 200-day moving average. The sector that it's in must be going up. A sector just means the area that a stock is based. Like Apple is in electronics, Coca-Cola is in food, coal mining is in
Coca-Cola's
raw materials.
cooperating with Pizza Hut.
Oh, nice.
They are?
Yes. And also Pepsi is cooperating with KFC.
Nice. I mean, I think they already work with them anyway. I mean, they sell their beverages, but advertising probably too.
A
The
bunch
stock must have
companies
an increasing the stock must have an increasing operating margin. An operating margin basically is the amount of money that's left over from the revenue of a stock after they pay their workers. I think I told you guys about that. And the DE ratio must be below some number for each certain industry. Like real estate, you could have their DE ratio could be up to 10 and still be really good. But energy is a much lower. A bunch of companies sell Coca-Cola. Yeah. Coca-Cola is a very widely sought after product, and a lot of people like to buy it. So Coca-Cola markets itself to other companies which sell it too. And volume must be higher than average. So let me tell you guys a bit about volume. It's not the volume like in your speakers or headphones. Volume means how many people are buying and selling a stock a day. Because when you buy a stock, somebody has to be selling. And when you try to sell stock, somebody has to buy it. So volume just means how many times are shares of a company passed from one hand to another in a day. So it's time to, well, you guys should make a strategy, but Tim, you can tell us what options trading is.
What?
You can tell us what options trading is, and you have 10 minutes to do it.
I do not need 10 minutes unless you have questions.
Okay. Tim, take the
Okay.
stage. Just tell us.
Okay. So option is basically a piece, it's basically a contract giving the buyer the right, but not like the duty to buy in case of a call or sell in case of the put. Call and put are like different types of options. Like a call is to buy, like call you're thinking it'll go up, and put is to go down or stay the same. So basically it's just another financial instrument. Like it's basically just short and stocks combined. It's stocks and shorts combined, and you have like, it's like it sells at a specific price. It's like a per moon price. It's like more expensive, but it can do more things. It's basically like having a pocket knife, like just one knife, and a Swiss Army knife, a lot of different equipment. Swiss Army knife is more expensive, but has more things. The pocket knife is cheaper, but it doesn't have as much things. That's basically what options and shorts and stocks are.
Thank you, Tim.
Stocks are to earn money from getting up, and shorts is you think it'll go down, and stocks is you think it'll go up. Basically, option is them combined. Okay.
Thank you, Tim. So does anybody have any questions?
So do you like, so you can sell it back for the same price that you bought it if you see it going down?
And
Is
there's
that-
also it's like there's a date which you have to give it back. It's only for a limited time, unlike stocks.
But do you have like, will you get the price, wait. So you pay them for the like the stock or the option, and then
And you choose a day where you have to give it back.
when you give it back, will they pay you money? Or like, in a sense, buy it from you?
Yeah, so pay you money.
The
Thank you,
same
Tim.
amount of money that you bought it with?
If you lose, yes, but if you get more, then you earn more money.
That's a very interesting way to invest.
Do they exist in real life?
They do.
Yes.
They do.
So why can't we use it?
You can use it. It's just that I think Investopedia has a glitch.
No, it doesn't.
If it's like that in real life, why couldn't have the person who's number one on Investopedia be the 14th trillionaire in the world?
I don't know, maybe he is.
That's a good point. So if you guys have a strategy in mind, you guys can tell me and we can test them. I mean, I don't think you guys have strategies right now, but wait, Jason. Oh, strategy options. I don't know. I mean, they could work. Jason, basically, an option is I run a company and Tim buys an option from me because Tim likes buying options. And so I tell him, sure, for $100, you get the right. You can buy the stock. Or if it goes down, you can buy the stock now and then make profit. But if it doesn't go up, you can just give it back to me.
On the date where you have to give it back.
But why would you do that?
Because there's less risk.
It's
But-
less risk on losing money.
Usually it's less risk means less growth, less money that you could get. But in this case, I think it's a good strategy.
Just
So
you become an instant trillionaire. I'm already a millionaire on
okay.
yeah. I
So
got 6
Shosha,
million.
the problem with your strategy is not because it's
Can I ask a
options.
question? May I? So basically, the option trading is if you can buy something from someone, and then you can have that stock, and then if you feel like it's failing or anything, you can just give it back.
Yeah, but the reason why you can do that is because you paid for that contract. You paid for the deal. So if you think the option will help you, then you can buy it. But if you think, no, I'm good on my own, you can just do it by yourself if you're very confident. So Shosha, the problem with your strategy is that your strategy should help you find a stock and see when to buy it. So your strategy, the word options, I don't think, does it tell you when to buy it? Oh, for Alan, there is a deadline if you're doing options. What time is it? It's 38. So your homework is to test and tweak, actually just make your investment strategy. Try to find a strategy that will diversify stock selection and indicate when to sell, as well as when to buy. Your extra credit is to share your strategy with a classmate and bounce ideas off of each other. You can do this in Google Classroom in the discussion section. And if you guys have any questions about your stock strategy, you guys can tell me. Also, I probably said on some of your homeworks that you guys did it early. I think I confused the two homeworks. I'm not sure what it is, but while you guys, I guess, write down any questions that you guys might have about strategies, I'll go take a look at that homework. Yeah, I definitely mixed up the two homeworks. So
Yesterday I bought this oil company. I bought its options and I lost so much money, but I'm still on 6 million.
Wait, you bought it, but you lost money. I thought you don't lose money with options.
I
he
sold it
bought it.
back
He didn't use
again.
options. Did you?
I sold it back again and I got the money back, but sadly my buying power has gone down.
Also, Shosha, the strategy is called cup and handle.
It lost $2.65 dollars.
How much was it initially?
It was what I forgot. It lost
should've
that much
bought it
dollars
for-
and I bought two 2,200 stocks of it. So I lost millions of dollars. Not millions, like,
That tens of thousands,
yes,
hundreds
tens
of
of thousands.
thousands,
You
somewhere
should
around
have bought
there.
it with options.
You should have bought it with options.
I did buy it with options and I sold it back.
But why did you lose money then?
I didn't lose money, but I was losing money before I sold it back.
So you basically didn't lose anything.
Yes.
So basically, yeah,
I lost so much money. I went from 6,400,000 to 6,118,030 dollars.